Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, April 1st, 2022. It'll probably be my only video today. I've got to leave town before the market closes today, and just want to get this one out to you. Nothing major. I want to share I gave you the charts of the VIX. I wanted to talk on that a little bit. This is QQQ so far, check marks on our sell signals. We rallied up, rejected off both the 200-day simple moving average, which is not on this chart. This is a 60-minute time frame. If I don't mention it, and you just look up here, you can see H for hourly, or there it is, QQQ hourly as well. So my time frame is always up here, but I try to point that out to you. So that's it. That was price resistance right there. Pretty decent price resistance, as well as the 200-day moving average, which we've been rejected off of, and more importantly, or as importantly, it all goes together. This nice 60-minute uptrend line slash bearish rising wedge with negative divergences. Breakdown. They danced on the gap all day yesterday, gave it up towards the close, and so far followed through to the downside. So check, check, check. Minimum targets remain 357.15-ish and 351.70-ish right there. And so, as I mentioned today, that I gave you guys the VIX futures. And of course, you can, if you don't trade the futures, no problem. I gave you a couple short-term VIX tracking ETNs. What I mean by that is some will track the medium-term futures. Short-term are going to be the April. I put up the April contracts for you. Here, let me move this down. You can see the volume starting to taper off on the April. So what I had said, actually, I added that in the comment section below. So if you come onto the site, I added the chart of the May contracts as well. The one I threw out this morning was the April. They're going to be very similar, but I gave you both charts. Again, I used the comment section to follow up with the May chart. And that's it. So what I was looking at is I had a minor trend line here, the larger, more significant trend line there. That one was already broken out. First of all, well, let me back up. First of all, you held support right here. You had a major reaction low there when you had this bullish falling wedge right here. See that? With positive divergence. Divergent low. You had a breakout back test, and then you walked up a very nice clean uptrend line, and then that started getting long in the tooth, and that was actually when would have been around the time we got our fifth and final target hit on that last VXX trade. Hopefully you caught the video yesterday, and I made a mention to it in the post today that VXX, thank you again, member my right side, pointed out that that's being retired. So you may want to change out if you are long volatility now, and if you're not, no problem. So that's it, divergent high, and then that set up this downtrend. You broke the trend line there, you moved down, and that's it. So the point is, I guess I'm showing you here that the VIX trades well to the technicals. It all kind of goes together. And so your best trades on the VIX or anything else that's correlated with another asset class or another security is to align that. So I had mentioned, and I'll get to that in a second, that your buy signals would come. You already had an objective long entry. That was the same objective long entry I pointed out the other day on VXX when it pulled back to our first target, which is a pretty good support level. It's been tracking, but as volume goes away, I wouldn't hold on to that much longer. I'm already out. I told you I got rolled out of that and just went into these VIX futures. You have price resistance right here, and I'll read it out in case you can't make it out. 23.44 is that level. I'm looking at reaction lows. Obviously, that recent reaction high right there. Boom. Let me do this. Boom, 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 boom. I'm circling all the reactions on around that level. So it's pretty good. So I think if we pop that, especially if it coincides with a break in the next support level. I give you a level on SPY. I think it was 451 if memory serves me correct. I'll get to that in a second. Then boom, that should bring in the stock market the next wave of selling. And I mentioned the SPY because the VIX is going to track. There's a VIX for the NASDAQ 100. And you can certainly trade that. And there's VXN is the symbol, at least in TC2000, but This is the regular VIX, more liquid, more actively traded. And here is the next target, 24.75, and then 25.88. That's where I had the arrows going up. And what I was trying to say earlier in the post, or what I did say, is, whether or not I'm just telling you what I'm doing. You guys do what you want. Whether or not I take profit at either of those targets will be dependent on what I see. Probably not just today. This is going to go into next week. We could pop that today, but I don't know. And then you can see my additional targets there. And in which case, I'll probably just trail it up, because when the VIX wants to run, if the market starts to accelerate to the downside, the VIX can certainly, in very short order, spike up. That's the nature of this beast, and those spikes are going to coincide with breaks of support in the market, especially those that surprise the dip buyers. When the dip buyers are buying the dip, everything's working well, hunky dory, things are going down, but all of a sudden, when they step in to buy a level, or they see a level that quote unquote the buyer should be stepping in, and then the uptrend should resume, and all of a sudden that doesn't happen, that's when you get these quick moves, because all of a sudden there's the VIX is a measure of put and call buying, and so all of a sudden there'll be put protection bought up quickly at that point, and then you get those surges in the VIX. So anyway, that's it. Let me just give you the other one. That was the April, and the May's are going to look almost identical. What's going on here? Let me pause the video. I had it. Let me make sure I have that chart queued up. Oh, I found it. No wonder I had it up on another higher part of my monitor right there. All right, so there we go. Same thing. 20. If you're trading the Mays, now the thing about that, they're starting to roll. Volume starting to taper off in the Aprils. That's what I mentioned, and starting to pick up in the Mays. Aprils still have more volume. So if you're just looking for a quick pop to hit my first targets, this will probably coincide with those targets on QQQ that I just laid out for you. A pop to these two levels. So. You just want a quick hit and run trade, that's what you're looking at. And what would it be in this thing if that second target's hit? About almost a 7% pop from where we're at right now in the May contracts. All right, and those are your levels. Again, that chart, you can view it on the homepage. Okay, and here's that SPY level I talked about. I called it 451 to round down. And I'm going to pull that line. Let me make it an even 451, just so it's clear. 451, it's a decent support level, and again, I think that'll bring in some selling. If that gets taken out, you have a reaction, danced around it there, you had a resistance right there, a couple more reactions, and again, it was a level I've had for a while here. It was very significant. This is a mess back here, forget about all that, but what there was is that a multi-month long trading range topping pattern with the false breakout attempt, just like I've been highlighting on the Russell 2000, but on a smaller time frame. That was a year long in the Russell 2000, but it lasted several months here, and then boom, there was your breakdown. You came back, SPY tried to retest it, regain it, and failed on 2 attempts. It had briefly popped into that back into that zone, and so we've regained it again. And if we fail it, then that just shows you yet another rejection there, and that's why I think that should bring in some pretty good selling and pop the VIX. So hopefully that all makes sense. Like I said, it's all interrelated, and it either works or it doesn't work. If the SPY holds this level and starts moving up and makes a run at the old highs, VIX is not going to go up. It's going to drop. So keep that in mind, and keep in mind that they're highly correlated trades. To be long the VIX, to be bullish the VIX, is to be short or bearish equities. One and the same. You're not going to make money on a VIX long trade if the stock market's going up, but with very, very few rare exceptions. Of course, over a very short period of time. Sometimes you get little brief disconnects if there's a lot of put buying or selling of calls. All right, let's move on. I want to show you crude oil, another update. This one I gave you yesterday, had a couple levels. I got, popped out. Almost made some money on that one, but I finally got stopped out yesterday. I've been batting close to 1,000 on crude lately, but I wanted to point this out. All right, so here's what I'm looking at on the 60-minute chart. Probably most important is this. It actually goes back here, right there to that level. That's our divergence line. Well, they're both divergence. You have this previous reaction low when my fourth target was hit right there, down to this low. We have a slightly lower low. All the while, the indicator has made higher highs. That is positive, aka bullish divergence. You also had, positive divergence there, a small divergence at that one, and we had that pop there. That was a tradable pop that I pointed out and caught that. So here are the key levels now. You have a downtrend line right there. You have an uptrend line here that was broken. This one's giving me a little bit of pause. I'm back in it now. As of this morning. But if you look at it from this point of view, I know I've got a lot of lines on the chart. If you look at it from this point of view, that's a symmetrical triangle pattern, and it was broken down and back tested. So that in itself is bearish. So if you get rejected, pretty much if you take out the recent lows, much above 98, you're probably going to go lower, and this divergence may be burned through, right? Otherwise, if you look at it this way, you do have, for the first time in a while, actually, no, even bigger, you do have it there as well. You have that smaller divergence I just drew right here, right? And you have bigger divergence right here that's been building. And it's these 60-minute divergent highs and lows that was right here. Divergent high, you got this. That was, you see the lines there, divergent low, positive bullish divergence, you got that. That ended with, you got it, negative divergence, and you got that. So you got to respect these bullish divergences. You also have to respect the fact that the primary trend in crude is bullish. Yeah, Biden's trying to jawbone it down to open up the strategic reserves, but supply and demand, whatever. If you trade off the fundamentals, it's like driving in the rearview mirror, in my opinion. Technicals are the most efficient and effective method to determine where prices are going, particularly in the short term. Fundamentals will play out over the long term, but if you're trading to the headlines, you're getting whipped around. You're reading news in hindsight. By the time you read about it, the smart money and those in the know have already acted on it in most cases. Anywho, I'm just sharing with you what I see. So it looks like a pretty objective entry with a stop just below 98 if you want a tight stop. You could also draw a little trend line here, near-term downtrend line like that, little wedge there. And just use the same target. I would say at least that former T2 target, it was T2 on the downside, about 104.50. Or if you get a trade, let it run because this is a divergent low. And so these last moves from that divergent high, the drop was, I'm just rough measuring, about 27%. Let me take that line away. Okay, sorry, I had to stop it for a phone call there. You had a downtrend line, uptrend line. I'm trying to pick up where it was. The positive divergence there, bigger divergence there. And so that's it. Now you think if we can pop back in the triangle, again, those would be your targets. Keep it simple. Just, you're above support at 98. You have bullish divergence. And what I was going with, the trends. That's what I was going to look at, measure these trends. That was about a 27%. Drop there. This one up was about 27 as well. That's tricky, and you say, well, no, Randy, how can that be 27% and that's 27? That was more down. That's the thing about when you lose money or something goes down. A lot of folks don't realize, if a security drops 50%, this is the thing where you got to cut your losses. You hold a position down, it drops 50%, aggressive position. Well, guess what? You think you have to make 50% to break even? Wrong. You have to make 100%, and that's simple math because if your stock was $100 and it drops down to $50, well, a 50% return on $50 is $25. You're only back to $75. You have to make 100% or double your money at that point. And so the more, obviously the more you go down, the more you have to increase in percentage terms. A 33% drop, is going to be, maybe, I don't know, 50% or something to get back to where you were. So anywho, I'm just trying to show you the scope of these trends here. And the point being that with this bullish divergence, you're looking at well into the double digits if that repeats and if these divergences play out as such. We'll leave it there. It's like anything else, either pan works out or not, and that's why you have stops if it doesn't. And pot stocks are green today, but not much. They're kind of floundering around. They could be flagging here, like this one, TLRY. Already hit that first target, had a pulse of move up. So potential bull flag on that, and some others here. Same with the GCC here, or CGC. I'm sorry, Canopy Growth. That is. You have potential flag right there, and so we'll see. For now, they're holding up. They're green and a red tape on the market. And the other ones I wanted to mention, I haven't followed up on these in a while, but they're still out there, and they're still, despite all the buzz about a lot of these Chinese educational stocks being delisted and other Chinese companies, they're really hanging in there, and so I'm going to rifle through these real quick. I'm going through the same basket that I've started highlighting months ago. I told you that there's not really an ETF that, well, there's in this sector, yeah. Number one, there's not an ETF that I know of that covers the education and training services. Plus, I went through dozens. I'm sorry, not hundreds, dozens of stocks in that sector and picked out those that had the most constructive chart. And TAL, this one you can see, in other words, they've been hanging in there. They put in that divergent low, moving up, still has big resistance. All the levels, you just want to revisit these. If you're new to the site, you'd want to go back. The way to do that is when you go into the website, right side of the chart, you can either open a post or just look below it and you see these tags always at the bottom of the post, whether you open it or you're just looking at the home page here, and you click on any of those. They're hyperlinked and it'll bring you to all analysis associated. So I'm clicking on XLF from yesterday's video, and it'll load every post that XLF has been covered. So by the time I get this video out, if you're interested in anything I covered in it, the tag will be down there and you can click on that. And especially if you're new to the site and what are these Chinese education? They're junk stocks. I talk about the high risk involved, my preferred method of trading them, which is a shotgun approach. You pick just one. Dumb luck's going to say that's the one that craps out. If you pick a half dozen or more, then on balance, lately they've been doing well. So I'm going to rifle through these real quick. Again, let me grab that chart back, and order that I've been covering them. TAL. So off that divergent low so far, it's rallied about 100%. Low price, high risk. Again, I can't impress that enough. Big old gaps. That's pretty much where if they can get some traction and break above, this one needs to break that 231 level and it run up and make a gap backfill. And if it did that, not a backfill, even to test the bottom of the gap, it would have to run 134% to get there. That's about 430. All right, let me hit the rest of them real quick. AMBO broke out recently. It's not really, well, it did rocket the first day, almost hit that 132 target. Close and pulled back down. STG, this one needs to break the trend line. So there's still work to be done, and if you start seeing more and more of these break out, and then 679 they could run. ZVO, this one's just going down, down, down. There's an example, one that you would have probably been stopped out if you took it, but there was also no buy signal. This one needs to take first needs to take the minor downtrend line. That would be buy signal 1. Second buy signal would come on a break of the larger downtrend line, and that would bring it up here to at least that 168 target, and ultimately 210 right now would be my final target if it breaks out. But it's it's down there in penny stockville, so, and without a buy signal. But this one's run. Here's an example. It took out the trend line. First, I had a little minor trend line here and price resistance. So there were multiple buy signals. Popped that 3120 resistance, popped that little trend line, most importantly, the primary downtrend line. And from that point, again, just show you how much these guys can move, it's rallied about 19%. And it's coming up to, like a lot of them, are targeting, is that bottom of that monster gap. This is when China cracked down on that industry, that sector. And but a lot of them are clawing their way back up there despite all these a lot of negative sentiment, very negative, and obvious real stuff. You get delisted from the U.S. exchanges, it's gonna hurt them. But so far they're hanging in there. I don't know where that whole thing is. I don't follow them fundamentally, by the way. I just look at the charts. HLG, divergent low. Off that divergent low, it's rallied about 60%. It's taken out. I'd add a line, which I'll do right now. Seems to be bouncing around, being capped by about 1430. So if we can pop that, 1762, and then the downtrend line. COE already hit the second target. There was an example of how the technicals work great on these things. I had that bullish falling wedge, positive divergence, broke out there, and it ran up, popped. This has already been covered. Hit the second target for about 150% gain. Pulled back to that 102 support level, checked it twice. It's a really nice support level, a lot of reactions there, and those two there, and it's been moving up, and it's already checked T2 once, So if it can get up there again, it may take it out and hit that final target, which again is the bottom of that big old gap right there. AFYA popped a couple weeks ago, ran up, hit my first target at 1616 for about an 18% gain, pulled back, had another run at it today, got checked, but it already hit it once. Now if it can pop it, that should open the door to that next target, 1857. REDU, again, buy signal 1 on the break of the minor downtrend line, boom, took out the secondary or primary trend line there. Boom, ran up. You know, from that first breakout, it rallied 100%. Pulled back, it's consolidating, and if it can, break above that recent area of consolidation, it could make a run up there to 187. RBY crapped out right here. I don't see any reason to be in that one now. I don't like it. I don't see a good trend line or any buy signals anytime soon. It's just not. But I'm hitting on it because it's in the watch list that I created for this sector. STRA, this would have been probably this line from my last update. We broke out. There's a nice long-term, beautiful, well-defined downtrend line. Your breakout candle hit the 6076 resistance level, which caused a back test, and then boom, from the back test, this thing went right up to the button to my next target at 6851 for about a 21% gain, and those are your next targets there. It needs to take out 6851. LAIX, that one was highlighted way back here and it popped, but it was a big gap up. If you were in it, great. That's where the shotgun approach helps. It made a 1000% return, which would have helped to offset many of the losers. And it's kind of been hanging in there at that point. AACG, you can see nothing's crazy there. ZME, big divergent low, kind of a wicked chart. There was another one that popped. It was highlighted back here. To be triggered on a break of the downtrend line, but it also gapped up way above there, went up 629% that day. So if you were in it, you might have sold that gap, because remember, my target on all these was the bottom of that gap right there, right? So that would have been, there's the big gap, and there's the bottom of the gap. So that would have been a reason to get out if you're in that, and then you sidestep that big give back in profits, but it's come full circle. It's down here now. Well, that's not my line tool. This is my line tool, divergent low, and we'll see. Kind of a sloppy looking chart. FHS had a breakout, but it failed so far, but it's hanging in there, but needs to pop, really needs to pop 213. iHuman, positive divergence, been moving up, needs to take out the primary downtrend line as well as the 318. They could also be targets if you're long it now. Or you add on the break of those levels and then target these, any of those initial targets there. PRDO, primary downtrend line, and we're above it now. Already hit that 1251 target once, had negative divergence, pulled back, but we have big divergent low here. So that's it. EDU, ready to go, but not yet. It's got a downtrend line, big bullish falling wedge. If it pops at 177, then 254. There's the bottom of that big old gap right there. YQ, this one's nice, another example. These guys are just kind of doing their own thing. They're not as much of a birds of a feather trade as the pot stocks. Those guys tend to move really highly in sync. These guys are just popping randomly. It's like like popcorn in the microwave oven. Some kernels are popping. This one popped, broke out, back tested right there. If you took it, it hit and exceeded my first target by a little bit, 163% rip. And it seems to be flagging right here. It could be a bull flag consolidation pattern. If it breaks out, well, my next target is T2 at 552. I wouldn't hold out for the whole flag. Well, the flag, I'll tell you what, that measured target would probably take us up right up to close to the top of the gap. Now, I'm going to use that as the flagpole because that's the impulsive move up. I'm going to add that to the bottom of the flag if it broke out soon. Nah, well, technically that's actually the bottom of the gap. I put the line here because there's more reactions, but if you see this little candlestick here, that is, well, that was the high of the day. The gap down to the open was right there. Yeah, that's where the open was, but that was the high of the day. And traders might look at that as well, and that would be about $7. That would be the measured target of the flag. So it's a range either way. Trail it up. If this one pops out of there and you're long or you take it on the breakout, then just trail it up, let it run. And watch the other ones too. That's the thing. If you're in one of these and it's running and you want to know when to take profits, Are the rest of them running, and have some of the others broken out? If so, that's going to increase the odds you're going to get momentum traders in the sector. But if only one pops and the rest are down that day or not doing anything, you might want to take profits, especially if one of the targets are hit for that reason. All right, let me see. That is, I believe that's all I wanted to cover today. Yeah, nothing's changed in my outlook on treasuries, gold, silver, the equity markets, or anything else that I've highlighted lately. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.